What's going on, guys? In this video we're going to talk about how to build your credit from the ground up. So this applies to people who have no credit, so how to start building credit. Also applies to people who do have credit and just want to grow theirs more. I started using a lot of these rules when I was younger. Probably started when I was like 18, and now I have about a 750 credit score, which is pretty good, being 21, but still trying to grow mine as well. So let's just jump right into this. So if you're brand new, how do you start? So there's a couple ways you can get started. If you have absolutely no credit, you're probably going to have to go with what's called a secured credit card. This is for total beginners, and it's backed by a cash deposit. And your cash deposit is usually the amount of credit that you can take out on that card per month. And the reason for that is you're a higher risk, so they're minimizing their risk by doing that. Now, secured credit cards aren't meant to last forever. It's until you can get a normal credit card and build your credit up. Another option for younger people who are just building their credit is student credit cards. Now, these do have a high acceptance rate, but you have a lower limit than normal credit cards and also a higher interest rate if you do use the credit. But again, great way to start building your credit. They're also not meant to last forever, obviously. They're called student credit cards. But those are both ways you can do it. Now, one thing to keep in mind if you do get those credit cards, don't use them on every purchase you make. Try and only use them occasionally, a couple times a month, on small items. So maybe, okay, you're going to get gas, and you get gas 4 or 5 times a month. That's what I use my credit card for, is pretty much only gas. The rest I just use the debit. Another thing is, if you're going to go apply for credit cards, do one at a time. Wait, see if you get approved, wait a little bit, apply again if you don't. If you're applying for them all at one time, it doesn't look good when everyone's pulling your credit. So that will make your credit score drop if you do have multiple at once. Another option for building your credit, my parents let me do this and it helped a ton, is become an authorized user on someone else's credit card. So you have both your names on the credit card, so you're still building credit, but they're making all the payments, so technically you don't have to pay anything. Only problem that this can have is if it's someone who might not be able to make a payment or miss some payments. Obviously, I trusted my parents, never had any issues, and it helped build my credit from the very start. Started doing that when I was 18, and that's like the main factor as how I grew mine pretty quickly. So it helps both of you build credit, but again, if they miss payments, it can hurt your credit. So make sure you're not just jumping on with a random friend. Parents and maybe very close friends, but make sure they're in a good financial situation. Now, third, again, is for younger people as well. You use your student loans. If you do have student loans, make sure that you're not using them to, I'm going to take out a little extra in my student loan so I can get a car, or so I can pay for this, or use it just for your education. It is a great way to build your credit. But again, if you're doing all that and then your payments become too much because you're taking out more than just your education, that can hurt you. So those are ways you can kind of start from the ground up, just building from nothing. Also, make sure you find the credit card that fits for you. So how do you grow your credit score once you start building it? Once you have a credit card, make sure you're making all your payments on time. And now this does go for your credit cards, but it also counts for any bills. So utilities, just anything like that has to do. The reason for that is this is a relatively new thing, but credit bureaus are now looking at working with like landlords if you don't have a lot of credit to see if you are paying your bills on time. So that is kind of a new thing. Most landlords don't work with credit bureaus, but some do. So again, obviously, pay all your bills on time. Now, the second one, keep your credit utilization low. Now, we talked about that before, but all that means is, let's say you can spend $3,000 a month on your credit card. Don't exceed 30% of that. So don't go over $1,000 on your credit if you have a $3,000 limit. I don't really like using the credit at all. I only use it for gas. I like just paying straight out of my bank account with my debit card, but again, you can build credit this way. Looks good if you don't exceed 30%. That's kind of the maximum. Is keep accounts open for as long as possible. Now, unless you have like unused cards that have fees that you're paying, you should keep them all open and active for the sake of the length of the payment, history, and credit utilization. So they can see you're using your credit as well as you've had it for a decent amount of time. So you want to keep those open as long as there's no fees and you're not using them. Now, fifth, this is a pretty important one. Never co-sign with friends. Now, it might be a case where you can, even no matter how much you trust someone, you never know if they're going to be able to make the payments or if they're going to make some dumb decision, go blow all their money. You don't know. So if some friend comes to you and asks you to co-sign, which if you're my age, a lot of people will probably come ask you because they're dealing with the same credit issues where they don't have enough, so they need a co-signer. Don't sign with them. They can destroy your credit for life pretty much if they miss payments or how bad it is, but your score will drop a ton if they start missing payments or take on too much debt. Now, how can we check our credit scores? I use Credit Karma. It's free. It's really easy. And there's also a website called NerdWallet where I got some of this information from, and they have a tool to use, but I recommend Credit Karma. And lastly, how do I know what's good credit? Like, what should I be aiming for? What do the numbers mean? Again, I use NerdWallet. This is kind of how they explain it. So 300 to 629 is bad credit. 630 to 689 is kind of average. 690 to 719 is good credit. So anything above 700, I know for auto loans, you can kind of get the lowest rates depending on income and everything else. But usually if you're above 700 or 750, you're fine. You can get the lowest rates on everything pretty much. So 720 and up is excellent credit. Goes up to 850 is the maximum. But they kind of break it down here. FICO is just a way of like justifying credit scores. So you can see how they break it down here by percentage. I'll leave this link in the description if you guys want to go learn more. This is where I got a lot of the information from, but I also added some of my own. And they just go into it if you want to educate yourself more. But the biggest thing for building it is get the credit card to start. See if your parents will let you get on on theirs as an authorized user. That's what helped me the most. And make sure your payments are on time and you never miss a payment. That's the most important thing. And if you guys have any more questions on this, just leave them in the comments below. And the next video is probably going to be about getting an auto loan. And I'll see you guys then.